Hello money magnets and master traders, it's your Uncle Charters here, and I could not wait to talk to you guys about one of the best price action trading ever. We had a strong rejection from the 20 daily moving average and around that 675.6 level. Not only was that a 20 daily moving average, but it was one of my fib levels, and it was one heck of a rejection. Let's talk about it. I usually use the 15-minute chart, as you guys know, and all these lines you guys see on my 15-minute chart, that's levels from the daily chart, but I add them to the 15-minute chart so I can trade them level to level style. I had a 674 level and a 675.6 level. You guys can see it started off the day with a breakout of 674, gave us a nice level to level move, hit my next target, made a few $100s there. Then we broke down 674, bounced off that 672.5ish level that I had, and then we recaptured 674, once again smashed my 675.6 level. On a regular day, those two setups right there, those two level to level moves, I would have been happy, made a couple of few $100s, solid. But then we had the monster of all rejection. We just couldn't get past that 675.6 level. That was a fib level, was also the 20 daily moving average. And I wrote in my Discord, this is at 10:59 a.m. I wrote another rejection from the 675.6's area with 674 failing as support. How do we know it failed as support? Because it broke down and closed below it on the 15-minute chart. False breakout setup. And I felt it was good for a level to level move when it went down and hit my 672.5 level. But I let my Discord members know. We know where the buying pressure is, 672.5. And we also know where the selling pressure is, 675.6. This means we have a chop range, and once it breaks, we'll get the next trend move. Holy moly donut shop, because look at what happened. When we broke 672.5, we had this legendary drop to the downside. And Uncle let his Discord members know both 674 and 672.5 failed, putting those lower targets in play. And every time we hit a level, I let my teammates know, my extended family on the Discord know, take most of your profits and leave a runner. If you know Uncle's trading style, I always say play it level to level and leave a runner. You go for base hits with majority of your positions, and you let the runners go for the home run. This trade right here, we made thousands and thousands of dollars. One of the best trading days ever, especially in my Discord, and I hope all my brothers and sisters in Uncle's Discord, my extended family, hope you guys made lots and lots of money. And why did we gap up? Because yesterday, I thought yesterday was an awesome trading day. We closed at 662.6s yesterday after rejecting from the 5 DMA, and the gap up was pretty nice, and it was all thanks to NVDA's earnings. And as far as NVDA goes, I let my Discord member know this morning, really nice gap up for NVDA. However, we must be open and prepared for any scenario. If it's profit taking time, 195.5 must fail as support to put those lower targets in play. Look at NVDA. This is NVDA's 15-minute chart, and wow, look at that. Look at that breakdown of 195.5, and it gave us this legendary drop to the downside. And I let my Discord members know 195.5 must fail. Gave us the plan before it even began, and it worked out beautifully. We're going to talk more about NVDA in a little bit, but let's get to the daily chart for SPY. Shout out to all my Discord members. I love you guys very much, but we got to get ready. As awesome as today was, it's 3:14 p.m. Eastern time, so the market's not even closed yet. We still have about 45 minutes left on the day, but I couldn't wait to make this video today. We have to get ready and prepare for the next trading day. And I would assume, unless something drastic happens with the bulls come in and we get an end of day rally, you guys can see that we are below one of my fib levels, a 78.6 fib level at 660.7. That will be my equilibrium level for tomorrow. As long as we are below that level, expect more downside for the SPY. As you guys know, in Uncle's trading video, I give you guys levels and setups, trading plans, both the bull case scenario and the bear case scenario, so that we can all make money. And I don't just lean to one side. I try to be prepared for both sides, because anything can happen in the stock market. That's why I love it so much. Anything can happen, and I just want us to be prepared so we can make money either way. When you're a money magnet, you don't want to be picky on how money is provided for you, on how the money decides to go to you. Bullish, bearish, doesn't matter. The money wants to come to Uncle, I will let it come to me. So 660.7 is the level to watch. If we're below it tomorrow, stay bearish. If we're above it, maybe we can get some type of relief bounce. But let's talk about the bear case scenario first. To the downside, it's around 656.5-ish as of recording this. Uncle has support at 655.5, 654, and this previous pivot low around 652.8ish. That pivot low was around early October's low. Now, in my last video that I made a couple days ago, I spoke about the 50 daily moving average, and I said that the last time we lost the 50 daily moving average, which was all the way back in February, right here where this arrow still pointing, SPY dropped more than $100 to the downside. We can also see on February 27th high and March 3rd high that it rejected from that 50 daily moving average twice before heading down lower. So the price action isn't quite the same as it was in February, because we went and back tested the 20 daily moving average and rejected hard. But overall, we're still below the 50 daily moving average, which means Uncle Charters is bearish. I am still not bullish until the price action tells me to be. So as long as it's below 660.7, we can expect more downside, and it will come in the form of breaking down more support levels, 655.5, 654, and 652.8, because if those levels fail, there's a great chance we drop down lower. I have multiple levels. I'll save it for my Discord members, but for my YouTube viewers, we can see 644 as a fib extension level to the downside. So if we lose 652.8, it's a good chance we go and hit 644 or maybe lower. I have one at 638.7 and 634.4 as well. That's the bear case scenario. If we're talking about being bullish and playing a bounce, I do have resistance at 657, 659, and 660.7. If those levels can recapture, then maybe, just maybe, we can get a bounce back to the upside up to 665 and 667. And with we still have 669. That's around where the 50 DMA is, but we also know where the strong rejection came from. It came from the 675.6 level, which is where the 20 daily moving average happens to be. So if we're talking where's the bottom going to be, Uncle? I don't know yet, but I will say that if we can get back above the 20 daily moving average and recapture that 675.6 level, it's a good chance we can put in a bottom. And of course, Uncle still has that triangle pattern. Breakout level is above 681 because it slopes down. So unless we can recapture those levels, there is no bottom. But if we do, then we can talk about if a bottom is in or not. Moving on to QQQ, very similar price action to the SPY, and I have to say we hit early October's low, which is around 589. If there is more downside to be had, 589 must fail as support, and then we can drop down a lot lower. I do have some support around 584ish. Then the next fib level is all the way down at 577.7, but we have to lose 589 to get more downside. If we are to trust the bounce, we must stay above 589 and recapture some lost levels. I have 591, 593, 594.5. But if you want to talk about a bottom being in, lots of work that the bulls need to do. But a level that can help the bulls out a lot, if it was recaptured, would be 599.3 and 601. That would recapture the 78.6 fib level and get back above the 5 daily moving average. Very hard for me to be bullish when price is below the 5 DMA, because when it is bullish, you guys can see many examples if you scroll to the left that when QQQ is bullish, it spends majority of its time above the 5 DMA. Right now it's spending majority of its time below the 5 DMA, so I can't get bullish until we're back above the 5 DMA and of course the 50 DMA, which is all the way up at around 607ish area. Right now it's looking bearish. Bears follow through, lose that 589 level, and we are going down lower. It looks like a head and shoulder pattern is forming as well. Here is Tesla. I had that 414 level, and this morning Tesla tried to break it out and it managed to hit the next fib level around 427ish, but at the end of the day, and during the day, it dropped back below 414 and continued to drop lower. The next support I'm watching is 399.7. If that levels fail, 391, 383.8, and 376.7 would be my target. I still can't get bullish unless we're back above that 414 level. Get a close above it at least on the daily chart. And of course, NVDA, this was the star. The earning was, well, it was pretty good, and it caused a gap up, but once it gapped up and the market opened, there was a lot of profit taken. The market makers took their profits and they went home. As of right now, it's looking bearish, and I would stay bearish as long as below the 185 and 186.7 level. That's a fib level. And as long as below, I do have targets at 181, 179, and 177 or much lower. Do not get bullish on NVDA unless it can recapture 186.7, 191.6, and the 195.5 level. That was the breakdown that started the sell-off. Here is Amazon still looking bearish. This ticker symbol symbol has been looking bearish, and it still is, nearly rejecting from the 50 daily moving average. Well, what's the next level to watch? Support level is at 217.6. Well, 219 and then 217.6. Those levels fail, is a good chance we go and retest the 200 daily moving average, which is around 214.8. And if that level is lost as well, 213 and 211 would be my next target. If we want to play a bullish setup, we need to start recapturing some lost levels. I have a fib level at 221.6, 223, and another fib level at 225. If those levels can recapture, we can pop back up to 228, and above 228 would recapture the 50 daily moving average. We need to get above that 50 daily moving average if we are to get bullish again. That would be a start. Here is Meta still looking bearish, and I do have levels at 590, 588.2, and 587. Those levels fail 584.3, 583, 580.3, and all the way down to 574.6 would be my target. Trust no bounce unless we can recapture some lost levels. As I always say, 592, 593.2, and 595 would be my resistant levels. If those levels clear, 598, 600, and 601.2 would be in play. Above 601.2, I would definitely favor a bigger relief bounce. Here is Microsoft still looking bearish. It even broke, or it's looking like it's breaking down another fib level. It has 36 minutes left, but that fib level is at 482. If we are to trust the bounce, I need to see 480 bounce and recapture 482 to put 486, 487.7, 489, 493, and 494.7 back in play. I'd be bullish for the short term above 494.7. Otherwise, it's looking bearish. And if we lose 480, 478, 476.5, and 475 would be in play. The 200 daily moving average would definitely be a target as well, and it's all the way down at the 466s area. Here is Apple, a very low volatile ticker symbol, I have to say, but it's looking bearish right now, closing, or look like it wants to close below 269.5. And as long as below it, we can drop down lower with 266, 264.5, and 263 or much lower in play. I just cannot get bullish unless the market makers tell me to through the price action. That would require Apple getting above 269.5 and 271 plus. Then we can talk about being bullish. Here is IWM as well, looking bearish, and it's hitting one of my fib levels around 230. And if that level fails tomorrow, we can expect more downside down to 228, 225.6, 224, and 222.3ish. Trust no bounce unless lost levels are recaptured. 231.7 and 234 are the two levels to watch. If we can recapture those levels, 236, 237.5, 239 or higher would be back in play. And last but certainly not least, definitely want to pay attention to the VIX. Potential double top, potential cup forming, but we never know what's going to happen. Resistant levels are at 26 and 29. If VIX can clear those two levels, it can continue to climb higher, which could mean SPY dropping down lower. If this is a double top and it's time to pull back, support at 23.8 and 22.3 must fail as support. Now, if this is a cup and handle, and the handle is going to form, remember, with the cup, it cannot drop lower than the 50% retracement level. That level's at 22.3. So if we're below 22.3, the cup and handle is invalidated and the VIX is bearish once again. But as long as above 22.3 is a good chance we'll head up higher, because above 22.3 I would remain bullish on the VIX. And before I let you go, here is the fib, here is the DarkPool level, 662.7, 1.2 billion in premium, 662.7. As long as what are we below it? Yeah, we're below it. As long as below it, we are bearish on the SPY. But if we want to get bullish, getting back above the DarkPool level will certainly help out the bulls. Guys, thank you so much for watching. If you want more content from Uncle Charters, join the Discord, become part of my extended family, and let's kick the market makers' ass together. We're all gonna become we already are money magnets, but we're gonna become master traders together. I love y'all. Peace.